remember what you wore on the first day. You came into my life and I thought, hey, now it's good.
Thank you, Mom. I think I forgot my birthday. No, I know. This is the Thank you, Esti. Wow, something about good ears and customer happy. Later, take your money well and smile and will pay for your degree, honey. Thank you, Mom. I will. I want to share something with you actually. This morning my mom gave me a present for my 18th birthday. She gave me 35,000 to pursue my study at UK.
But Africa, do you think that money is enough for you to survive there?
I think it's not enough for me. Actually, I need around 40,000. But then I don't know how to grow my money. Do you have suggestion how to grow 35,000 to 40,000?
Okay. See, do you know anything about IPO?
No, I didn't know.
Okay. Actually, I just bought a subscription of Beta Global Venture Holding. But I cannot share to you now.
Okay.
Can I just email for you later?
Oh, sure you can.
Okay.
Okay, bye. Thank you.
Okay, welcome.
Here are some prospects of the palm oil market in the short run and long run. Malaysia has become the world's second largest producer of palm oil and continues to be the global benchmark when it comes to developments in the industry. In March 2008, crude palm oil or CPO prices consolidated over the RM 4,000 a ton. During 2012 and 2013, the prices have since almost halved, hovering at the amount of 2,300 and 2,500 ringgit. But CPO prices are expected to remain strong throughout the year, supported by demand from traditional buyers such as China, Europe, and India. And producers are making a good profit margin from the sale price of 2,500 ringgit a ton. CPO prices are expected to remain strong throughout the year. Tuan Sri Lee Chin Cheng, IOI Corporation Berhad Executive Chairman, said demand for palm oil is picking up again, especially from traditional markets. He is hopeful palm oil will trade as high as 2,800 ringgit per ton by end of the quarter. Palm oil is in for an exciting period boosted by sustained demand as it is arguably the world's most efficient, most competitive oil pound for pound compared to its peers such as soybean oil and rapeseed oil. CPO prices are expected to improve throughout the year due to declining palm oil production in Indonesia as a result of rainfall deficit over the past 2 years. Researchers maintain its CPO price assumptions at 2,700 ringgit a ton for 2014 and 2,900 ringgit a ton for 2015. This new stand will hopefully create awareness among global consumers that Malaysia's palm oil is harvested sustainably and does not involve the destruction of orangutan habitat and deforestation. However, the industry will be full with challenges throughout the year, such as Sarawak could lose some 400 million ringgit in annual sales tax revenue from oil palm products because a multinational refinery company's refusal to buy CPO from mills in the state. Here are some expected return on in general and of recent times. It is well known that despite the deep initial offering price discount, IPO stocks generate low returns over holding periods of 2 to 5 years following the IPO date. Several works have found that initial expected returns for retail investors are not significantly different from the risk-free rates in the period between the subscription and the first listing date. IPOs firms on average have lower average debt to asset ratio and higher stock liquidity in at least 3 to 5 years following the IPO, which becomes a potential risk reducing factor. IPO stocks have significantly lower leverage ratios and exhibit greater liquidity than other small growth stocks. The liquidity factors reduces the expected return on portfolio of IPO stocks. The IPOs with higher investor demand have large positive initial returns but negative longer run excess returns. Based on the IPOs listed a year before FGV, only 4 out of 18 companies that issued IPO have higher initial returns upon the closing price in the same day or overpriced, while the rest are underpriced. Investor demand for an IPO is largely driven by the over-optimistic and over-pessimistic reaction by investors to the information about the firm's prospects prior to offerings. Specifically, a higher demand IPO is more likely to create a speculative bubble. This speculative bubble may temporarily push the stock price above its intrinsic value, followed by long-run price correction. As a result, a relatively high positive initial return will be followed by a negative long return. And as a result, a relatively high positive initial return will be followed by a negative long run return.
Hello, I'm Trades here. May I help you?
Hello, I am Anika. I would like to ask you about FGV IPO. Can I get more information about the company?
Oh, yes, miss. I would love to help you on this. For your information, FGV got listed on the main board in Bursa on the 31st May of this year. And it has become second largest IPO in the world. According to our research, this IPO has a lot of pros and cons. Here is some information that will help you.
The ruling government is claiming that the IPO is an exercise which will protect the future of more than 112,000 Felda households. Some of the basic fundamentals of FGVH is that it is the third largest oil palm plantation operator in the world, and it is claimed to have experienced and professional management team. Several other investments overseas, including business segment producing soybean and canola products in Canada and oleochemicals in US. The experts stated that the company's listing will turn the domestic organization into a global player by transforming Felda from a domestic and local organization to making the quantum leap as a global player. The prospectus had listed that out of the 4.46 billion ringgit expected to be raised for FGVH, 87.7%, which is equivalent to 4.46 billion ringgit of the funds will be utilized for investment purposes such as acquisition of plantation assets, oil and fats manufacturing facilities and businesses, as well as other upgrading capital expenditure. Here are some pros and cons to invest. Based on the results of analysis, here are the pros and cons of if Afiq Firash decides to invest in the IPO. Share price of the IPO is expected to exceed 5 ringgit. Local market condition is favorable for FGVH. FGVH is seeking a listing with an enlarged share capital of 3.6 billion shares of 1 ringgit each, and the company is entering the market with a market capitalization of 16.2 billion ringgit. The big size opens up for large investment institutions to come on board. Company also has a strong net cash of 3 billion ringgit upon its listing, and it is expected a healthier financial positions for FGVH. While the cons of this IPO is that the big size locks up some of the liquidity on the local market, and crude palm oil prices fluctuation, which is termination of land lease agreements, high dependency on associate, which is Felda Holdings Berhad for various aspects of operations, fluctuations in exchange rates, and change in export policies.